Well, hello, class, and welcome to BACC 531 Managerial Accounting's Week 5 of our course together. This week, as we dive into our fifth week of studies, you completed Week 4 and the midterm exam that comes with it and the halfway point of our course. Now, as we begin the second half of our course content and hit the accelerating stride toward the end, we're going to begin studies on some additional concepts and some additional content that will help you to improve and to empower the organizations that you're leading and the responsibilities that you're managing as part of your role in your professional context. This week, we're going to take a look at 3 chapters, a little bit more in terms of content, but don't hit the panic button. Your assignments for this week have been balanced to compensate for that and to help you manage that. But 3 different chapters of content we're going to examine this week, all of which are focused on the topic of budgeting, and more specifically, how we will use budgets to better manage and to better operate the organizations that we are working with. Chapter 9 is going to examine financial planning and analysis in relation with something called the master budget, the overall budgeting plan for an organization. Chapter 10 will take a look at standard costing and the analysis of direct costs, and then Chapter 11 this week is going to explore flexible budgeting and analysis of overhead costs. To explain the importance of these chapters and the skills, the techniques, and the concepts that you're going to explore this week in them, I want to begin with a statement, an assertion, a philosophy really, that's common in the context of management and leadership and across a variety of professional fronts, and it's summarized by the saying that those who fail to plan to fail. You probably heard that before. You may have said that yourself before to your team or to those around you in your particular context, but it denotes a very important truth, and that is that planning is a crucial part of professional skill sets, of professional operations, and of managing and leading organizations in any context. Planning involves a variety of different considerations. It includes setting goals, yes. It includes crafting strategies and evaluating objectives and putting in place plans that help us to achieve those goals and those objectives and to meet the ultimate ends of our organization. But part of planning is also recognizing that we have to deal with the scarcity of resources in the world in which we live. And because scarcity is a thing, because that represents a true economic reality, there's not an endless amount of any resource, we have to budget. We have to plan to allocate how much of each resource, how much of each area, be it a direct material item, labor, overhead, or other types of costs that we're managing. We have to make plans for both what's needed and how what we have or will have in our possession is going to be allocated in order to achieve the strategic goals as well as the immediate operational goals of our particular business enterprise. When we talk about budgeting, it is fundamentally a planning process. A budget is one of those words, it's a 6-letter word, not a 4-letter word, but it's often treated like a 4-letter word in a variety of organizations because of the fact that budgeting gets a bad rap, and it's often associated on personal and individual basis with the idea that we have to give up fun things. We have to give up things that we would like to buy or wants that we want to have possession of. We have to give up those things in exchange for discipline and for sound financial management on a personal basis. Well, in a very real sense, that same conundrum is true for organizations. When managers budget, they have to recognize that there's only so much of each resource to go around. And because of that, we have to make choices regarding where we're going to use or to deploy that resource and how it's going to be employed, in what amounts, at what time, and to what degree. All of that is part of the budgeting process. Well, even though budgeting gets a bad rap, it's actually something that can, if it's well used, lead to a number of not only organizational advantages, but also a number of morale boosts within an organization. If you use, for example, a participative budgeting process, that's an avenue for enabling your employees and your team members to have meaningful involvement in not just the budgeting process, but the overall strategic planning for the organization that flows out of that budgeting process. Giving everybody a seat at the table, giving everybody the option to have input tends to yield greater buy-in towards the end of the process, and it also tends to increase the morale of employees because even even if they don't get what they want out of the budgeting process, they at least understand that they had input, meaningful input as part of that process, and the ability to shape it. There's several different avenues and approaches that we'll explore related to budgeting, but all of them share in common that they are a plan for the money, for the resources, for the activities and the actions of a particular organization. The master budget is essentially just stating a broad, big picture plan for the entire organization. It begins with the sales budget and will then move into the cost of goods sold budget with its various components, including a materials, a labor, and overhead budgets. You'll then go through the selling, the general, and the administrative expenses budgets of the organization. And then, of course, you'll culminate with budgeted financial statements. That is, that we can actually construct and put together a budgeted income statement, a budgeted balance sheet, a budgeted statement of cash flows, even a budgeted statement of shareholders' equity can be constructed based upon the assumptions and the projections in the master budget and through the master budgeting process. Well, one of the advantages to that is, again, the obvious planning that comes as part of the process in order to make those assumptions, to put together those plans. But one of the inherent disadvantages of that process is if you're making one specific big picture plan, oftentimes in the real world, things change from the original assumptions, either in terms of production volume or the availability of resources, the cost of resources, or other factors that are part of that picture. That brings us to what we're going to explore in Chapter 10 and then especially in Chapter 11 with the concept of the flexible budget. The flexible budget is called the flexible, or affectionately among accountants known as the flex budget. It's called the flex budget because it has the ability to change. Specifically, variable cost items that are part of the master budget will be flexed as part of that process according to changes in production volume. So if production is higher than expected, the flexible budget can be increased and those variable cost items will scale up to match with production. The use and the implementation of a flexible budget enables managers to get a much better assessment of how well the organization has performed. If we're only using a static budget, as you'll see, that doesn't change with anticipated or actual changes in activity levels over time, managers have a justifiable excuse of saying, well, production went up. Of course, my budget's going to come in at more than what was expected. We made this original budget based on X number of units and we came in at 20% more. Of course it would be more. Well, the flexible budget enables us to isolate the change that should be expected based on that change in volume. And if there's additional change beyond that or other impacts that are part of that, it enables us to break out those different components, those different reasons for variances, as you'll learn to explore in the budget process, and gives us a deeper level of examination related to them. So all of the concepts you're going to explore this week are going to be inherently practical, inherently useful to you, as I hope you found all of these concepts and chapters as we've moved through them. But particularly this week, you're going to find a tool, a set of tools, and a range of tools and techniques that will be applicable, useful, beneficial for any professional context and for any organization. In the way of assignments this week, in association with those three chapters, you're going to have your Week 5 reading assignment that will be found in Connect, as well as your Week 5 problem set to go with the videos, the recorded lecture sessions that I've uploaded for you that go into much greater detail with regard to each of these chapters. As always, if you have any questions related to those assignments as you work through them or to the chapter content, please reach out and let me know. You can reach me at jake.brock@ucumberlands.edu. I'll be glad to hear from you and glad to help you any way that I can. With that, have a fantastic Week 5, and I look forward to hearing from you soon.